Valens Research, Uniform Financial Analytics.
BMY, Bristol-Myers Squibb, one of the largest pharmaceutical companies in the world. And one of the things that just jumps off the board for us when we look at Bristol-Myers Squibb isn't the traditional PVP, which also jumps out. It's what we see when we look at EPS, right? One of the most basic metrics people look at, EPS, can be violently wrong when you're looking at as-reported metrics. When you look at as-reported metrics for Bristol-Myers Squibb, you would think that 2020 was a terrible year for them. You would say, wow, 2020, because hospitals were closed down, nobody was prescribing anything that wasn't related to COVID, and nothing else was going on. EPS plummeted, right, from $2 a share down to negative $3.99 a share in 2020. In reality, when we look at uniform accounting basis, what we can see is EPS actually grew. It rose from $5.40 to over $9.50, $9.47, sorry, to be exact, a share over that same time period. Bristol-Myers Squibb didn't get less profitable and lose money in 2020. It actually made more money in 2020 than it had ever before on an EPS basis, and it's forecast to see that accelerate. We can see that looking at uniform accounting return on assets too. Look at this, on an as-reported basis, you would think over the last 3 years, returns plummeted from 2018 to 2020. Uniform accounting shows a totally different perspective. Return on assets have accelerated massively. And when return on assets have accelerated massively, the valuation the company trades at relative to its asset base hasn't, meaning the market isn't pricing these things to continue, right? If anything, at a 6 times uniform PE, the market's expecting returns to collapse. And so what's wild is you've got a heads I win, tails I don't lose issue with Bristol-Myers Squibb, and you only know it if you're looking at the real uniform accounting data. The as-reported data would say, yeah, you've got a declining business that's trading at a low multiple. It's only when you see the uniform accounting data that you can see, I've got a company that's investing aggressively and seeing returns expand, and the market doesn't see it. That's a super compelling framework that you wouldn't even think to see if you were looking at bad as-reported data. And this is the kind of insight that we can see when we use uniform accounting. It changes our conversation from a declining business to an improving business. And that means we're going to talk to management and other investors differently about it. It changes the conversation from a weak business with low valuations to a massively high business with low market expectations. All of these things are about reframing how we actually make investment decisions. That literally mean if you're screening on the wrong as-reported metrics, if you're vetting companies on the wrong as-reported metrics, you will like the wrong companies and miss the right companies. And that's the risk, and that's why it's so important that people use uniform accounting and cleaned up accounting data to actually focus on the world of companies, not arcane accounting mathematics.
Valens Research, the world's leading source for uniform financial analytics.